mess this up too. There we go. All right. So still don't have the chat back. So the chat is going to be a little bit weird again. Stream. I think it's okay. All right. Yeah, I gotta love updates. Every time it updates, we end up losing, right? We end up losing something. We lose the chat inside of this box, so it makes it a little bit more difficult. And I have to look it up every time, and it takes me a while, and then I finally find it, but I can't get it back on. So anyway, hold on. Sorry, I got Kit back in here with me today, and the boy's mom is picking the boys up. She just got back from her trip, so we're gonna hear a lot of barking, and we'll hear the probably one of the boys come up and say goodbye or something, even though they know I'm on stream. So anyway, quite a bit of movement in the pound yen. Basically, it's the yen. It's the yen again. There's really, I mean, there's nothing really to say. Yen, euro pound, again, retracing from yesterday. Aussie dollar totally flat. Dollar CAD totally flat. And really, euro dollar, pound dollar, both of them, I would say, overall pretty much flat too. Dollar Swiss being up a little bit. The news we got so far this morning, again, unemployment, absolutely something we wanted to look at. Again, they talk about unemployment as being one of the two mandates of the Fed, which is 100% true. Again, coming in lower than expected. Again, a green number. And then obviously the manufacturing, kind of forward looking, it was expected to be bad, but it was really bad. So that is Empire and Philly both getting just hammered down at that 22 to 24 range. Not ideally what we were looking for. Now, the EU did do the 0.35. Again, a lot of people, interestingly enough, the euro pound, I get it, the 56 year. I'm actually surprised it's not more in the euro dollar as well. Remember, yesterday they were saying that the overall consensus was they would do a 0.35, right? And they ended up doing the 0.5. So it kind of throws things back on. And again, we're going to be getting some comments about that in the next 10 minutes. Really kind of throws the ball back in the Fed's court. Now, there's been some very interesting comments within the last 24 hours. Those of you that know the guy who wrote The Big Short, well, he made some very interesting comments yesterday that I was listening to it. I was like, man, this is awesome. This is like dead on. And a couple of things what he talked about, and it's interesting to hear the different kind of opinions on it this morning about what the Fed's going to do next week. He basically said, yeah, everybody wants the Fed not to do it. If the Fed suddenly says, oh my God, we're concerned and doesn't raise, you don't take that as a good sign. That's a bad sign. If the Fed's really concerned about the economy crashing, don't take that as a positive, right? At the same time, if they raise interest rates, you also got to look at that one and be like, well, yeah, inflation is a problem, even amid the fact that we've had banks fail. That's also a problem. He said there's really no good outcome to this, which again, he's known to be more of a bearish type of guy. But yeah, it brings up some great points. Now, a lot of people have actually they've mentioned that whenever you have something like this type of bank failure or whatever, that this is actually is kind of the equivalent of raising once or twice. 2 weeks ago, everybody was convinced that we were going to be up in the 6 range, right? And people were questioning whether or not it was going to be a 0.5. And now everybody's questioning, are they going to do any raises at all because of everything going on? Could that cause more problems or what? This morning, I think the most recent, and again, this was the Jim Cramer take on it. Yeah, he says that they kind of have to do the 0.25 because otherwise you admit that you're wrong. And then again, that could cause a lot of panic. But then he sees there being a pause after that. So a couple people have said they'll do 0.5 or 0.25 because they said they would do it. And then do a pause just to make sure that the banking system is stable. But if you take a kind of a picture back, their two mandates are inflation and employment. And both of those are still really strong. And GDP for first quarter was also very high. So besides the banks having the issues, then is it kind of like just a bank regulation thing? Is that the reason they're failing? Because all the other data out there says you need to keep raising. So, yeah. So a lot of different takes on this whole thing. We know we have Yellen speaking. I believe she's speaking at 10. They're talking about this morning that she was going on. I think she's talking now, but I don't see any headlines from her. Yeah, I don't see anything yet, right? But on the way home from dropping Melissa off at work, yeah, basically they're like, yep, Yellen's about to go on and kind of give us an idea what's going on. Don't see anything yet. Now, this is kind of funny, right? China's blaming U.S. bank woes on bad regulation and policy bickering. I mean, I don't know. It's hard to say that they're wrong, right? Because like you can't blame the Fed, right? You can't blame the. It's funny, both sides of the aisle. You know, originally this is all because of things that Trump did. Because again, Trump's got to get blamed for everything, right? And then it's kind of trying to blame the Fed, right? That no, it's the Fed's problem. And then China basically just says, yeah, it's U.S. It's bad regulation and political bickering, right? It's hard to say no. The United States doesn't have political bickering. Buds, no. Mm-mm. No. Yeah, it's kind of hard to say. It's hard to disagree with this one. Yeah. Yeah. Could the US's problems be because of political bickering? Hmm. Yeah. Exactly, buds. Um yeah. Exactly. So yeah, so it's kind of funny China's jumping on board. So we're going to get some headlines coming up in the near little bit here. You know, I'm sure that the Fed was really kind of hoping the unemployment claim number would be higher than expected, kind of gives them more room to stand on. But if you just take everything at face value minus the bank failure, right now everything is saying that you need to keep your foot down. You need to keep the pace. We already know it was going to be basically a 0.25, not a point 0.5. That was kind of already factored in. It was just how many more they were going to go and what the top end is. And again, Kramer was talking about how people are like, oh, the consensus is, we may have one more and then a pause and then we'll start lowering, where the Fed's already said they're not going to lower till next year. So I don't know. Kramer's track record when he's saying this is what needs to be done, and this is what's going to happen. Based off of his typical rate of correct versus incorrect, feels like that will not be the right policy. Who knows? Maybe he gets this one right. So we shall see. Now, in the next 24 hours, we have University of Michigan consumer sentiment. The reality of this one, guys, is I don't really, typically, the boys' mom just got here. I can hear the dog barking. Typically, U of M consumer sentiment would be kind of a big deal. It's expected it was going to be a little bit higher last time. Obviously, this data is looking backwards, right? It's a composite level from a forecast. They take two versions 14 days apart. 14 days ago, we didn't really have the bank problem. So it is consumer sentiment really a valid kind of is it really valid for what we have going on right now? And I would say, no, not really. Because so much has changed in the last 7 days. An assessment that is looking back over that 7-day period. It doesn't really give you a good, it's not a good look, right? So I don't know that it will be necessarily the biggest mover. I think the big question will be is how do we end off the week? There was a comment in here. Yeah. So ECB told ministers Tuesday that some banks could be vulnerable. Again, that has to do with the raise. And there was another one down here as well that was kind of similar to with the U.S. That if we continue to raise, that it's going to be, there's the possibility if they continue to raise, there will be more banks, right? Supposedly I don't want to say run on the bank, but the withdrawals from the bank are still higher than expected right now, although slowing, which is good. But the bank crisis is not obviously over, if you want to call it a crisis. Okay. So while normally I think this would be a great way to end a Friday, I don't know that it's going to give us the bang for a buck like we normally get tomorrow. All right. So we kind of got to go back to just pure, technicals. Now the VIX. Obviously the VIX yesterday, we had the big spike up and the big spike back down. Funny enough, it kind of looks like, oh, look, there's supply there. And oh my God, it hit the supply. Obviously, a volatility index is not necessarily a supply and demand based event. But it's kind of funny how it works out. You see gaps over here and buyers stepped in, and we're kind of floating in the middle, and people aren't really sure how to look at this right now. You can see the markets are a little bit negative, as they should be. I mean, again, the Fed is supposed to raise. That causes more stress on the banking system. At the same time, if they don't raise, again, employment is fine. The labor market is definitely stronger than they would like. As well as we know inflation is too high. It's like, are we willing to admit defeat there because of one other thing? And will that cause inflation to rise again? Because here's the problem. But stop. If they halt and inflation continues to rise, then we have a banking system that's already messed up. We have inflation rising and they've already stopped. And they've already said the stopping is worse than the going. So, yeah, a lot of, yeah, a lot of fun. A lot of fun. Would not want to be a Fed president right now. I think their job is going to be kind of interesting. Now, the dollar, Again, huge rally up yesterday. We talked about a parabolic move. It kind of came down. The day ended, kind of reset again. The European market kind of forced it down. Kind of had this like 5 o'clock, 5:30 reverse. We're holding firm right there. So, maybe it's yelling that we'll kind of move this today. I don't know that we're going to get a lot of movement. I think the 104 is justified. And really, this is just again, it's a shame that there's so much political. I mean, you say, is it truly political? There was I don't know if you guys just saw it down here. Where is it? Here, this one. The Fed chair versus the senator, right? So, yeah. And here's the thing, right? I think if you took a poll and said, is it better that we have the Fed Reserve chairman be responsible for this? Or, and again, remember, supposed to be third party, completely, non-affiliated with politics, right side, left side. His job is, he has two mandates, right? Employment and basically price stabilization, inflation and employment are the two, right? Those are the two mandates. He's fixing it. It looks like it's starting to work. Or should we let the Senate Banking Committee, which is a bunch of politicians, right? I'm going with the Fed guy every single time. But obviously, we know the politics is a big problem in there. So, yeah. So the dollar where it is right now, I think it's in an okay place. I think we try to push back up to 105. We start looking for sells. I think it has a very hard time really breaking through the 104 level again. Again, I do think they are going to continue to raise. But the question is the pause going to be a great thing? Are they going to look at the pause and think that, again, the market has been on this, they're going to cut. So right now, again, higher in the curve, looking for more shorts. If we can go up a little bit higher in a 105, I think it's a great short. I think 104 will provide some stabilization. If it does break through, obviously down here, the 103.50 is going to be a big deal. All right. Now, indices all in the red. And I think at this point, I feel like it's somewhat justified. Before the whole banking problem kicked off, right? We were already seeing layoffs everywhere. Tech, it was not great. Now, again, JOLTS data was going up again. The hiring was looking pretty good, but we saw the unemployment, that ratio of basically taking people higher paid to lower paid, right? We already saw that. We knew that earnings have been a problem, and now we have all the banking stuff to throw on top of it. Again, a lot of people are like, oh, the Fed's going to be done, but the problem is that the banking system's starting to collapse. Could show some underlying problems. And again, if the Fed stops to halt the banking problem, then they've lost all confidence, and it's like, whoa, that could be another big turning point. Like I said, we do not want high inflation and a banking system failure, right? That's that whole stagflation thing that we were talking about last year. And we've gone literally from a no landing to a hard landing again. And again, right now, senators, the way to fix this is to make banking regulations even harder, which we know in the long run, it's great, but it will cause more failures now and more panic. So I kind of feel like it's all justified right now to be in the red today. And with the data out there, I mean, this data, the 192, showing that unemployment claims are lower than expected, below that 200,000 mark. I mean, the Fed does not have a manufacturing index as a mandate. It does have, jobs, employment. So kind of sketchy, right? Looking at crude. Crude's down a little bit. Natural gas is up. Gold and silver are both up. And again, seeing the dollar pull back a little bit. We saw yesterday gold was higher. Gold and silver both. And it's like, wait a second. The dollar's higher, gold and silver higher, and bonds is higher. How is that even possible? Right? Well, it's based off of what was happening with the fear, right? So natural gas, we're literally holding right at that 250 mark. Hold on. Was that the boys? No. Okay. Sorry, I was just making sure that wasn't the boys if they need anything. I told them they'll come in the room, but if they need me, text me. So where gold and silver are, they're both up a little bit, and I think that's justified right now. Again, the dollar tends to be a flight to safety. Gold and silver tends to be a way to preserve wealth. Again, if people are concerned about a banking system crash, typically what happens is people go to bonds. But if you have the banking system faltering, right now, at least especially in Credit Suisse, people are buying insurance on their bonds because of the increased risk of failure. And with everybody talking about how they're going to raise them, bonds is normally the safe haven. Right now, I would say probably physical gold is a better safe haven for people that would typically go towards bond with a stock market crash. Right now, again, bonds are associated with a banking system that's going to have higher regulations. And again, people are buying insurance on their bonds in preparation for somewhat of a crash. And again, remember, rising interest rates not great for bonds either. So kind of a weird place for bonds right now. So again, gold tends to be the safer investment at this point. Now, driving over into the Aussie dollar. There's what we're looking for. So we ended up getting a lot of chop through this. Yesterday morning, we were sitting right here. talking about how we had kind of pushed through that level right at this 1030 mark here. We knew we had some areas here, right? It ended up kind of slicing through, gave us a little bit of a hair buy, and then look at all the basing. So we were really talking about what was going to happen late last night with the Australian data. It did take a bounce. It came back to the same level of basing and then took off. So it did give us a 3-to-1 based off that news. I thought it would be great news. It ended up going a little bit early up, and then the news came out and pulled it right back down into a level basing. So it turned out to be a great little trade. We were kind of looking for this level for news, and it was. It just went lower first. So we were off by a little bit on that one. Right now with it, I think the easiest thing to do is really to look at this kind of low to high and say, hey, listen, we can reverse it the other direction if you want. But it has hit the 78, so that's where I tend to remove these, and we just start to ignore them. And we kind of go in the other direction. Now, here's what we're looking at. You can see it kind of sliced through. It didn't really even slow down at the 50. It kind of ran into the same sellers and actually turned right before the 61.8. Right now, we have lower highs as well as lower lows. So, sometimes we'll mark these things off. I think, again, looking at like a parallel channel, there's your tops. Kind of goes to the bottom that way. I'm kind of okay with this. Again, we had that dollar weakness yesterday from the profit taking. But if you think about what's going to happen now, the overall consensus is that they are going to raise interest rates next week and then maybe put that pause on. That if they don't, it signifies more of a problem than what they're willing to admit right now, or that actually may exist, right? If nothing else happens, if no other banks fail in 2 weeks, we'll just be like, oh yeah, remember SVP, and it's funny, of the three, like the first three that crashed, the only one we talk about is the one that was associated with tech startups. We're not talking about the two that failed that were associated with crypto. It's funny how very, very fast the two that are associated with crypto, it's like, hey, sweep them in. We're not going to talk about them. Nothing to see here. Move on, right? So right now, I like this one, a slow grind back down again. I'll kind of throw one other thing up there. Obviously, there was a little bit of a trade setup right there that you could have traded right at the 8:30 today open. Again, why would you trade at 8:30? Obviously, unemployment claims and Philly Fed. So there was a bit of a trade in there. It wasn't a monstrous trade off of it. I don't think the 1 to 3 is in there, but there was a trade set up right at 8:30 this morning that it pulled back into a zone. This is what it looks like if you had taken it. Let's move this around so you can get a good read on. 1 to 3 is right. 1 to 304. Actually, it did get out. There's 304. So it did take it out. Right. There's 3.19, but you can see right on. So it actually did tag the 1 to 3. I didn't think that it did. So there was a very, very quick setup in there, but I think this one does continue to deteriorate today. I don't know that it's going to give us enough movement. I don't know there's enough catalyst on this one to really take it much more than that. Aussie yen. So we knew where the news came in last night. It's right here, this little pop. So pop up, boom, and took off. Very, very similar. We talked about 8806 being an area for news. Again, at 9 o'clock, we knew that it was chopping through. At 10 o'clock, we were kind of pushing through the backside of it. Right at 11 o'clock is when it broke. And then what did it do? Based and popped. Came back down, based, and again, that's where the news came up. It based again, pulled back again, and took off. And we talked about 8871. How's that? European session right there. So again, mention of all of them. I love this pattern. I like the way how this one was set. And again, it touched here. It actually should be adjusted just a slight bit down to there. Even with the higher one, it still worked. This one is obviously out. But if you guys had traded this one, again, if you attended yesterday's session, love that setup. One of my favorite setups right there. 1 to 3 really sitting right there. So you can see 55 pips, right? 55 pips in this one. Not bad. Now, where we are, obviously we went a little bit lower than the 88. I would say you could run this down here if you wanted. There was, here, I'll just take this one. I'm going to use this one down here. Right. There's the zone. And that's what we just bounced off of. Obviously, it's a bit too deep right now. You could have taken this for a long. Again, a 1 candle bottom ascending like that. I think that looks great. This was formed at 12 o'clock yesterday, 12:30, so we didn't have the luxury of drawing that. But I love that. 1 candle bottom. Red was the spike all the way down. It came up, it stabilized. It's like, oh, yeah. And then, boom, it popped. Great zone. Great zone. And again, driving into that one at 9 o'clock this morning, right in for that 9:30 U.S. session open. Perfect. Perfect. But you may not have got into it because you may still be short this one. Again, you're looking for an opposing zone. I would say the opposing zone, if I was going to do 2 profit targets on this one, obviously profit target 1 would have been sitting right there, right? Was I super concerned about this one? No. Nice base, one hit. This was hit number 3. But there's profit target 1, there's profit target 2 on that one. So pretty easy to draw them both out. Number 1 is at a 1 to 4.3, so you got to love that. And that's about a 75 pip runner. This one was about a 120 pip runner. But the 1 to 3 on this is right there. Right, there's the 1 to 302. Okay, so you can see we're well past. So if you were here yesterday, again, love the level. Very, very easy to grab. Think it was great. It's out now. Look for reversal back up. And it has been here a few times. So depending on what time we hit that area, I don't know that I take it again. All right. Again, easy, easy level. We talk about easy setups. This is the easy one. And again, you just have to wait. Yep. This one you're like, oh, so close, but it's late at night. You may not have caught it. And then came down and boom, 4 o'clock. What but's here? What's that? No? Okay. Euro dollar. All right. So euro dollar. So this one, we talked about the 50% level being a potential level for a reversal. All right. We're sitting right down here. Now, we did get a confirmation. There was a green, there was a red that didn't close below, and then this closed above. So there technically was a confirmation entry right there, right? Green, red did not close below, and then obviously the green above, it did. You can see it trailed away from that, but this may have been a little bit too far away for you. But we had mentioned this level right here. We said, hey, listen, it's a 50%. It got hit. If you take high to low, it's right there. How's that for a tag? Right? How's that for a tag right on the number? Oh, what you got? This big loud thump, and I was like, oh god, I have no idea what that was. So, if you traded this one, obviously it's pulled back again. This one is pulled down about 85 pips, and it's rallying back up to that zone. I probably wouldn't use it again. I do think that there is something to be said about this kind of front run zone right here. And again, it is kind of coming up there for 1030 reversal. Remember, it's not as strong. It's actually already triggered this top level that we had yesterday, the 50% Harry Potter pullback. Again, it didn't hit the 50. So this is, for some of you out there, I mean, if I bring this across, it's the same trade. You can see. I love when people do this. It's a 50% retracement. It's not a 50% retracement. The 50% retracement was up here. You would have actually missed your entry by about 8 pips. That's way more than what the spread of this one is 4 times. So you didn't get in. But if you look at the old zone that was created, it did actually tag the zone. And again, this is the exact reason why I use supply and demand over Fibonacci. Okay. But where we are right now, I do think it is probably due for somewhat of a reversal from this level. Being 1030, it makes sense why it would reverse at this time. Now, question is, do we get any comments? Obviously, she's speaking. It's funny. On the way home, they're literally like, Yellen's about to go on in 15 minutes, and we'll see what the administration is going to do or is thinking. And yet we've seen absolutely nothing. So I don't know. Maybe it's 10. Maybe she goes on at 10. But I swear they said 15 minutes. I thought it was 9:30 that she was going to go on. So I don't know. But anyway, let's see. Hold on. Inflation is projected to remain too. Well, yeah, there you go. Look, kind of interesting. We're monitoring the markets closely. The forecasts were finalized in early March. We're only in middle March, so they weren't going to. They're like, hey, listen, yeah, we're monitoring it. A lot of problems are going on, but we weren't going to change it. And what did she used to say? Inflation is projected to remain too high for too long. Right? Industrial projections prevent the labor market strong. Government aid should be temporary and targeted. Important to roll back support measures promptly. Services inflation driven by past energy increases. There we go. Most measures of long-term inflation expected to stand. There we go. Look, I don't really see much about banks in here. So it looks like the ECB is solely focused. And again, she said, yeah, obviously we're monitoring it closely, but again, inflation is too high, market is good. So that's pretty decent. Now, again, this should wash out and we should say, okay, so that means the Fed should be doing the same thing. That should run us back down again. So we may actually not get an entry on this one. Overall, I think profit targets need to come back down to probably this level. It may hiccup a little bit. Obviously, there's a zone there, but it pushed it pretty deep. But I think right now, I'll shoot for 105.35 for today. But I do think it rolls back down with dollar strength coming back in. Kind of funny. We kind of pointed this one out. I had it drawn from today when the news was coming out. And again, with the raise, pretty easy. And again, you may say, well, why did you draw it there? Well, we knew that the main refinancing rate was coming in at 9.15. You can see 9.15. It actually turned at 7, not 9.15, but the same result was the same. Look at that. I almost, again, I drew it to the bottom and went just slightly below. So not necessarily surprised. Let's 1, 2. Yeah, I still think it probably bounces a bit off of that. So, yeah, not bad. Look at that. It did use the 78, right? It did use the 78. I was like, just come a little bit more. This goes down here. So we like this one. I don't know why I had moved it there. I may have reversed that one back, but it was the 5071 or 5078. So yeah, expected the push, and we said this. Hey, listen, if they're expecting 3.5 and they come in at 3.5, it should be weak, right? Now, if it had come in at the 0.35, then that would have been a different, increase. That would have been different too. But they did the 0.5. So again, pulling back, the market wasn't phased at all. So kind of expected. Let's take this one off. Let's run. Yeah, look, those poor people that were trading the 23. You ready? You ready? Get in. Go long. All the way to the 50. um, Buds, what you got? What you got, Buds? Um, um, I think it's important to note the 61.8 is definitely going to be a level. There is a level of basing, and we do a confirmation touch right now. With this pushing down, I think this is absolutely be a reversal point at 87.62. Question is it really going to change the trajectory too much? Obviously, Lagarde needs to finish. She needs to finish speaking. How much more has it got to move? 16. It may be close to being done. 96. Yeah, once she's done, I think this has the ability to probably stabilize and bounce a bit. Like I said, there are buyers there. There are people are going to be looking at that again. It did break through the 50, so there'll be some artificial buying there. But I think the 61, I think 86, 87.62, I think is probably decent. But I'd like to see it kind of push in and then pop its way out. I'd like to see it confirm off that level more than anything else. Euro yen. Funny enough, look at this. Euro yen went straight down, kind of popped up, and again, maybe offered a little bit of a surprise, right? Um, Funny. This one from 6:30 on, right? European Open 6:30, straight down in preparation for that pop. Did it break? I believe it did. Yeah, it did, just by a little bit. Right there's the pop. Hmm. So it looks like traders were a little bit surprised, but the end result, I don't think is going to be any different. Funny, this was yesterday. Look at that. Yes, yesterday's zone. Right. But again, two mirror tops. Next time through, we should push all the way up to 142. Um. Hmm. Problem is we don't have a ton of great zones over here. Yeah, I'm not as interested in that. Mm, yeah, see that one's broken now. I don't want to. That one wasn't horrible. Oh, actually, you know what? One, two, oh, 3 and 4. So yeah, that was expected to break. Let's pull that. All right, so we know. So we're really kind of shooting for this right now. Hmm. There's a little basing in here, but look how much time it spent there. Not as concerned about that, right? That's a 12 to. It's a Thursday. It's a 12 to basically 7 p.m. So for 7 hours, it did absolutely nothing, right? So the next is kind of a Harry Potter setup on this one. Put it here. That's kind of what we're looking for next. Yeah, it's 14 pips. It doesn't look like a lot just because some of these are very streaky candles. Let's see what that one looks like when we come through. It's like 13 pips for 39.40 in the other direction. So not bad. Not horrible. Right. Not the worst of positions. All right, pound dollar. All right. So let's remove these profit targets from yesterday. Both were hit yesterday. We talked about them. And again, we more or less stabilized. We were sitting right here yesterday. Here's your 1030 candle. We're kind of right there. So what is the difference? 17 pips, 16 pips in 24 hours. So not really doing much. Um, Again, it found buyers down here. Went a little bit lower. The problem with this one is there's not really any great zones when you look up in here. Again, we blew through that Harry Potter. Let's take that off. I'm gonna put that there. I hate that it does that. It's like kind of like I always want this on top, but it doesn't always work that way. Um, Care about that. Same tops on both. Hmm. Problem with this is I don't really like this zone. I was hoping that it would smooth out a little bit if I went up to a higher time frame, but if I went to 30 up to an hour, that this would get cleaner. But it's just not, right? I mean, on 4 hour it would obviously because I can absorb those four candles. But look, you can kind of see it there, but not even there. It's not great. Look, 4 hours, open, close, right? Open, close, open, close. So it's not even clean. Hmm. I mean, we're in the top of the curve. So again, we're looking for shorts. We're looking for dollar strength to roll back in again, but we're waiting for some headlines. We know that there's no UK news, so the UK news technically should be chopping up with anything bad US based. But again, this morning was pretty good. So we kind of need a comment. We need something out there to kind of drive this one because there's obviously no catalyst with the UK market. And as far as zones go, I guess you could run this high to low and say, oh, what did we hit? I guess we kind of hit a 50. I mean, yeah, there's some selling over here. So, I mean, it was a decent, I guess at 4 o'clock, it was a decent setup, right? It wasn't the worst thing in the world, but we're kind of pushed back in that same level again. I don't think I'd take it again. Really, I think for me, until we get up to 121.46, I don't think I'm interested in doing much in that one. So, as far as it deteriorating to the downside, you could say that, hey, listen, there's, we're looking for continuation patterns. There's kind of a Harry Potter. It's kind of broken through. Maybe, maybe if we kind of take again, this is not an entry, right? This is not an entry for a Harry Potter, but it has proven now that this is a broken level, but it did support again here. But this would give us our 1, 2, or I'm sorry, 1, 2, 3, hit number 4 coming through rebasing. There may be a short, and the question is, are we going to be able to chop through this stuff, right? Some junk to chop through. The next level is not until all the basing is all down here. So this is going to potentially be a problem. But I think once people are confirmed with dollar strength, I don't think we'll have much of a problem. It's just where we start the dollar strength from, and maybe, maybe it's here, maybe it's consumer confidence. I just don't feel like you can throw much weight on this right now with everything that's happened in the last 7 days when it's a reading from before. So obviously confidence is going to be shook right now, right? Obviously, there's bank failures. So I don't know on that one. Pound yen, continue to go through. Here's your open. Right, we talked about 161.26. This is one of those ones where it's like, love the zone. Here's yesterday at 2:30. We were sitting here. All right, we were sitting right here yesterday, and it ended up coming lower. Right, so it didn't quite get into that range of the 50, but again, we were sitting here. This one tagged this at 2 o'clock in the afternoon, and there was your short. So I do remember at the end of yesterday, I said, hey, listen, all the yen pairs are basically in the same type of a setup. 1 to 3 is only right there. So you can see it was out rather quickly. Right there. I don't think I can get it to paint yet. Sometimes it's weird. Again, This one did not hit. This one did not hit. There was your original entry at 2 o'clock yesterday. Right now, we're kind of in the same area. Like, what do we? 66 difference. Oh, it's because it was up here. Right. It's gonna pretty soon. It's gonna deteriorate rather quickly. At 11, it's like just a little bit off. So yeah, I mean, we're still hovering right around 160. We knew 160 was going to be a problem. You can see yesterday, a little peak above, little peak up, bounced off that 160, bounced off the 160, bounced off the 160, pushed down, and then came back up, and we're looking at 160 again. So the trajectory for this one obviously is going to be yen driven. I wouldn't really say there's much trending on this. We run fibs all the way down at this point. You can see we're kind of up near that 23, but there's no kind of consistent level with it. There will be some selling because again, people are going to look at this going up, high to low. That's it. It's at 23. And again, the one thing that I would say, and again, 160 is going to be a big level, coinciding with the 23.6. It's probably not a horrible short there for the technical traders out there, as well as it is kind of this old Harry Potterish level. Whoops. I'm just trying to make it this way, trying to go this way. So there are some reasons to sell it, but really this was the trade from yesterday. It was like this zone here that was a much better level than what we're sitting at right now at the 160 and 23.6. But obviously, again, this is why it's trading. Again, you can have a somewhat of a definable risk level there if you really wanted to. You are getting basing. But overall, this is purely a yen play. We know that the pound is in a good place. And overall, I mean, yesterday they said that the UK will not go into recession this year. That the same thing cannot be said with the US right now. So, dollar CAD is chopping. So yesterday morning we were sitting right up in this level, right? 10:30 we were sitting right here. It did chop through the top side, right? So it was kind of rough. And I said, I believe this is the one I told you guys, drop to a lower time frame and see if you can get a confirmation on this one because we were already at 9:30. We are kind of pushing into it, and we drove through at 10:30. So it was kind of like, oh, wait for that confirmation, right? On the lower time frame, you did get a confirmation. Again, kind of sitting right over here. It didn't actually go all the way down, so we'll just leave it on the 30-minute. It didn't push all the way down. It ran into some problems in the UK this morning at 4:30. And all it's doing is rallying up again. So as far as fibs go in this one, the 61, you would have pretty much gotten stopped out on it. We probably got stopped out. We were looking for confirmation, and it did come in. I would say if you are looking for another entry today, I would say that this is probably not the worst level. We'll remove this. Is it coinciding with anything fib-wise? Not really, because the 78 is sitting above, but there's no kind of level there. You'll see this level of basing, if I bring it back, it's this level. Right? It's this level where the confirmation was. So it made sense it turned where it did. We were trying to target this kind of front run. We were looking for the aggressive level because it was more closely associated with the 61.8 versus the confirmed level, backstop by the 78. So it's there. I don't know. I think this one right now, it's very hard to get short this position in my eyes. The reason why is because, again, I'm a big believer in dollar strength right now. I think the Fed has to raise. And at the same time, oil's back down to 66. So the CAD's not getting any help. Come on, get out of there. We don't need to play under there. I just don't see a lot of strength coming into the CAD. I don't think they're going to not be able to sustain as well. I think that the U.S. is going to have a little bit more resilience in it. So although it's a short level, if you didn't get in here, I wouldn't play with it again. It's eating up a lot of orders. If anything, wait till it comes even farther back up, up in this range, 138.48-ish range, right? Dollar Swiss. So dollar Swiss, like this. So we need to address our Harry Potter a little bit, right? We talked about this coming through. We said this yesterday. It's like, listen, we got a base on this one now. If we can get a pullback, and it's doing a pretty good job basing in there. I think we adjust this just slightly to the downside, right? What do you want? With this? You can have this. There we go. And we do get the base over here, so it's kind of hard. I think either one is okay. I like that this based right inside of that window. I'm kind of a big fan of that, right? We do know we have some buying here, but again, it did chop back and forth. We know we don't have a full range in that one. This is a hard one because I just said I like the dollar strength. You can see this is what we bounced off of. Again, chop, chop, chop. So much chop through there. God. We're sitting in no man's land in the middle. I just have such a hard time. I mean, the Swiss bank is who's backstopping Credit Suisse. No, you cannot have those. No, because you're going to take them and put them everywhere. It's going to be a big problem. Here, take this. Ooh. All right, well, here, get down, but go over there. Get away from the computer. Here. Oh, there we go. There you go, buds. Oh, remove dollar Swiss from this one. I say I like this one to the downside. I just have such a hard time trying to get short the dollar for the Swiss right now. Cat, what are you doing, bud? Um, I just don't want to get short this one. I mean, it's obviously a technical pattern, but I just think there's better opportunities out there right now. So it's there. It's the same feeling that we had yesterday. Dollar yen, again, continue to deteriorate. Same exact position as the other yen pairs. So we drew it. You guys remember telling? I hope you guys remember if you caught this one yesterday, how much I like this zone. I was like, "Yep, I love this one. This is great. I love it. 50, perfect." There's your short. Right, you were out at what, 10 o'clock last night, and what did it do? Bounced right off the opposing side, came back up, and again, 1, 2, 3, and 4 started the base and broke through. So yeah, I hope you grabbed that one because that was my favorite level of everything we talked about yesterday. That was an easy 80 pips. So, um, I think all three triggered, didn't they? Yeah. Boom, boom, boom. And again, I think this is the one we like the least because it really wasn't an accompanying zone. So this is a 2 o'clock formation, so it hit, right? This one hit, but that was the only one we didn't draw. So what was it? 54, 100. So we're at 150, another 86. So 240, right? Gotta love those trades. Right. And again, same trade, three of them. You could have taken any of them, and they're all decent. Right now with this one, I'm really looking at 131, saying, hey, we're at 132 right now. It's 100 pips. This one has a daily ATR of 167. Are we going to get enough movement today or comments to kind of push this down? I feel like right now I just don't want to mess with the trajectory of this one. Like I said, the dollar yen is not my favorite pair to play, particularly with banking system issues right now. Again, easy setup, super easy setup yesterday, but we just don't necessarily have one right now. I can run this down. You can see 23 is nowhere. The 50, there's kind of a zone sitting right there, I guess. Right, kind of a zone. This one has now been chopped through. We can change this yellow. It's all right. I just really want. I think 131 is really kind of where we're targeting this one next. I would say that this is really, you know, I think 131 is where this goes. Right. If not by today, the end of today, tomorrow. I think 131 is kind of the new baseline for it. So, it is what it is. Bonds up again. Right. Bonds rallying up again into an area of sellers. Crude oil, we already know that this one is taken off. Yesterday we said 66.61. You can see 12.30. We hit the 66.61. Took a bounce off of it. As it pushed down, you can see, again, very technical market, as well as there was a level of basing here at that 10:30, 11 o'clock. Right after we got off, it did form a base there. So you can see it did provide a short opportunity with a pullback, and it's doing exactly as it should, right? It doesn't matter which entry you took, right? You would have been this one again, touch, touch, touch. You were saved on the top side. 1 to 3 is sitting right there. So again, obviously you were out of all three of these trades. It doesn't matter which one you actually got in, right? All three of them are out. Again, right now I'd say this one goes lower, right? I mean, if the Fed doesn't pull back because the economy and market is collapsing, that's good for this, right? If we continue to raise and then acknowledge that the market's collapsing, I still think it's down, right? Overall, we've had a ton of inventory. Yesterday came in as expected, so no major driving factors right there. So yeah, and I just um, again, gloom and doom in the banking system and world crisis. That tends to be bad for oil overall. So, and remember, if you want to stick it to Putin, the price of crude oil dropping down because we have too much supply is a much better thing than you trying to say we're only going to pay we're going to price cap it, right? Right? It's funny. It's funny how that works out. The Fed has done more than any type of price capping. Anyway, natural gas. Natural gas just chopping back and forth. We marked this one off, and you can see yesterday at 8, we marked it off as being kind of like a Harry Potter level. Got the Harry Potter trade. It came down. It did touch the 241 yesterday, about 1 o'clock in the afternoon. Came back up, grabbed it, and we're just basically chopping sideways. I don't think, I mean, natural gas is an intraday. It's not necessarily something that people are focused on looking at right now. There's other things. No, not yet, buds. Couple more minutes. Here, buds. Here, here. Um, I think natural gas is losing focus. I think it's losing steam, for lack of a better word. Again, once the I can tell you it's still super cold in Maryland. It's like 50, but our wind chill makes it like 25. It's horrible. I think once this weather front's out, like I said yesterday, I think this one again it's doing its best to stay at 250. I think it starts to really make a push. And again, maybe not this week. I think by next week, or into next week, I think we start really. I think we take this block of kind of where we're at, and I think next week it probably moves down into here. So I think next week we're talking about 240 to 220 is what my prediction would be. Now gold, okay, now gold is just high, and again there's this kind of overnight level. Actually, not overnight, but it formed at 12:30 yesterday afternoon. That's kind of what we ran into right here. Um, with all the touches, we knew it wasn't going to hold, and you can see it's using it as a base here. I like this level right here for when we do finally turn and roll. Again, a little bit of a base here. Obviously, all the basing that occurred over on this side will change this. I will leave it red because we're really looking for more of a short out of that one. I think what we're looking for on this, whoops, not that one. It's this one here. And we go here. And we go 1 to 3, which is right there. 1 to 3 dead on. Right. Profit taking on this one, obviously you need to be out before there. Right. And that's that level. There we go. All right. Right there. All right. So, do you think we are very, very high on the curve? As I said, gold right now is kind of a flight to safety. Again, when bonds are sketchy and people are scared about bonds, um, yeah, gold tends to be the thing that people will move to. So that's why we're seeing kind of the invigorated push. But at the same time, look at silver. Silver is only up 0.02. So silver doesn't look as good, right? Gold, it's like, oh, look, we got kind of like a new peak and we're kind of bouncing off levels. Silver, not so much. It came up yesterday at 8:30 in the morning. We knew that. We were standing right here, and what did it do? It pulled back down again and again. It's coming kind of right through the same basing level. Came back up, used that 22, and is deteriorating. But the question is, are we going to continue to fall now? We do have a bit of a Harry Potter trade in here, and again, this is obviously the channeling that's occurring right here is a little bit crazy. Whoops, a little bit crazy. Again, bottom, top, bottom, top, bottom, top, boom to the bottom, top, bottom, top, bottom. So it's there. I think again coming through 21.34, we look at this one to come all the way back down to 21. But we mentioned that we expected 22 to be a ceiling. I think it's there. I think it comes back down, and it's really struggling. Look, 0.01, which is 0.00. It's really, really struggling right now. If it cannot reverse to 1030, I think this slowly deteriorates back down again as people are trying to move out of the asset, right? And again, the farther we get away from the banking crisis, if nobody else fails next week, I think the entire market starts to stabilize. And it was like, you know what? They were just really, really bad banks. Everything will be good from now on. And that's kind of, I think, where we're at. All right. What do we got with Apple here? Tesla, it's kind of chopping. It's almost in a sell zone right now. Apple, also kind of pushing up, but again, it's having problems with sellers coming in at 155. Looks like 154. Looks like there's a big area of sellers there as well. So let's check out what the overall indices are doing. A little bit of a gap down, which is not bad. Let's see. All right. So, and again, from yesterday morning, yes, we got the rally. And I said it yesterday, all the news coming in, I expected some type of a rally coming off, and we got it. So right now, let's see. 9:15. Hmm. Obviously, we're in a downtrend. 8:15 is there, so we, it's kind of it's a little bit off. It's kind of way up there. Buds. So we don't really have a confirmation. Obviously there's a level sitting right there, right? We were down here. Let's see, we're right here. 8:45, 9:15. Yeah, it kind of pushed down. What happened? You're okay. Come on, you're okay. What happened? That's why we don't stand in drawers, bud. He's so small. He tries to stand. He pulls the drawers out on this like dresser I have. Come here. You banged your face. I know. You're okay. Yeah, you're. Oh yeah, big baby. Big baby. He tries to sit in there. Well, when he was like 10, 15 pounds, he could sit in there. Now the drawers just fall out when he does it. So good thing he has a flat face. Um. Anyway, there's basing. All right, buds. Too much. Too much. Come here. Too much. Nobody. one sec. Here, 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 here. Hey, stop. I'm going to put you in the other room. Here, Peppa. Here, here. Come on the floor. I'm almost done. Here, here. Get on the floor. Don't break my phone. All right. So we did have a confirmed level. I don't really love the level over here. A little bit too big. Spent too much time. It is confirmed. It did bounce off of it, but not really. This was a yesterday afternoon trade. I like to have this for opening print to kind of get. But I'm gonna put you in the room. I can't take it. Stop, please. Um, I like for this one to. Oh my god! I'm gonna put him in the other room. I think. Stop. Stop. Okay. Sometimes I have to be quiet and then he'll stop because he tries to cry over me. Anyway, this is from yesterday afternoon. I like to see some type of a confirmed level in the overnight. Unfortunately, if you look over here, there's not really, there's some basic. Kip, stop. Here, here. You want this or you don't want this? There's just not a confirmation. There's not really a pullback. There's a 915 candle here. It did rally up from that, but this is not at a level, and it did get to a level of pullback. So, again, has been a crappy. Kip, stop. Come on, buds. Here, play with this. Here, here. Look. There, look. What's that? Ooh. Boing, boing. You just didn't get the pullback. All right, hold on one sec, guys. I'll literally be back in 1 minute. I gotta turn Pep off. There we go. All right, he's got an entire room of toys. It's like, hey, here we go, and then he gets distracted. All right, so there's no real pullback for me. So as much as I love to say, hey, get short this one, it's got to be an overnight pullback. Yesterday is not necessarily like the biggest concern. So just again, I wish there was more this week, but with all the different banking things we've had, we just haven't had the open. NQ. So NQ had a little bit different of a setup when we talk about 15 minutes and pullbacks. There was a pullback right here around the 8 o'clock time frame. Is it the best pullback? Not really. Again, it spent a lot of time there in the overnight, all through. European session sent it down, and it did pull back up at 8 o'clock. And you could say, oh, we're right there right now. Yeah, it's okay. It's a little bit bigger of a zone. You may be short this one right now. And it's not the worst of positions. Again, being at that 10:30 time frame, I think it kind of makes sense why we're at where we are. And what all it has to do is go down to the low of the morning. That's it. If it just goes down, there's your 1 to 3. So of all of them right now, I think this is probably the best setup. Um, the opening print is here, and there's obviously not a confirmed zone over here. So this is not, again, not what we're looking for, but you could potentially be in a short trade right now. It's already at a 1-to-1. I wouldn't take too much risk on this one if you're in it. It has pushed all the way down to a 1-to-2. So really, at this point, you should have this one locked in as like a, basically a free trade. If it comes up, stops you out. Again, there's no major trend in this one. YM. YM is kind of looking very similar to kind of what we saw in the ES. It is pulled a little bit too far away. If you look to see where the overnights were, 815 was the closest pullback. This is really nothing here. And if I shrink it down to make it a little easier, a lot of basing, pull back over here at 4 o'clock, but we didn't even get close. It just is tearing back down again. And we know that there's buyers sitting right here. And that's kind of, we've talked about this zone yesterday. So it's kind of set up for a bounce as well. Ideally, not in a situation, not in the position we want. The data today, and look, actually, it kind of Harry Pottered off that this morning, but I would have. I don't think that was a super clean one. So right now, this is the range that we're in. The best thing we have right now is really up at the 68 level right here, right? The 61.8 level is the best we got. At least there's a confirmation off of that one. The 50, there's nothing there. I guess a little bit of a front run right there, but that's the best we got for it. So really just, it's okay. Nothing great. And then again, Russell is showing you where all the fear is right now. This one had kind of a 4 o'clock entry here. This one did have a little bit of a base. This one was kind of, I would say, closer because there's a confirmation right there, but you can see we didn't get the entry on there. And again, downside, 1, 2, 3. This is hit number 4, so you expect this to fail. You would not be taking a long off of this one. So you wouldn't have tried to snipe this at 9:30 and say, "Yep, I'm going long." You wouldn't have because again, 4 hits. One, two, three, and this is four. So not really the best. If anything, you would have been looking for a short here, but you would have had to really kind of stretch it a little bit. Um, that's taking the whole candle in base, and then even so, you probably still didn't. No, you still didn't. I can see the line there. It's minuscule, but you probably would have filled it. So unfortunately, this is the problem. Again, prevailing, 22, 17. We have a banking crisis, 23, 18, 15, 14, 6. Even the pound yen that was up 380 or something like that is only up 63. And, again, dollar Swiss being the biggest one. And again, that's, not that Credit Suisse is the Bank of Switzerland, but um, yeah, yeah. So kind of hard. Here you go. That's what I was looking for. So it looks like the president 3 to 4 didn't support decision. Not waiting on a commitment to fight inflation. Sure, determined. Let's see. Was adopted by a large majority. 3 to 4 didn't support it. Dissenters wanted more time to monitor the situation. No trade up between. Okay, your liquidity is perfectly addressed. We didn't decide anything on at roll off. Okay, so not horrible. Let's see. Hold on. If baseline persists when uncertainty reduces, we'll have a lot more ground to cover. Sure. Yeah, we're going to have a lot more ground to cover. So again, they're acknowledging the banking, but saying that, listen, inflation is the biggest problem right now. Is it possible what the rate push will be to? Yep, I agree. The next question on whether rates have peaked refers. Yeah, I think that's the right thing to do. To say that this is the peak, I don't think they really know because they got to see what the effect is long term, as well as obviously the banking problems. Stand ready to respond to preserve price stability. Yep. Could exercise creativity in short order if there is a liquidity crisis. But this is not what we're saying. Look, they're acknowledging not a liquidity crisis. So, I gotta say, sometimes I'm not her biggest fan, but I think everything that she said so far has been spot on. I think it was the right thing to do to continue with the raise. I love the fact that again, there are a couple of people that didn't support the decision and they wanted to wait, but we know that waiting is a problem as well. So, man, I gotta give them credit. I think they're dead on today. So, proud to them. Let's see if the Fed follows through. I'll tell you right now, if the Fed follows through with what they should do, following the same path of doing the 0.25, which is what everybody expected, I think there's going to be some red next week. I think people, the way that that when I say the market, I think the stock market, the way that they've looked at it, they've completely ignored any data that didn't support what they wanted. Right? It's all fake news. Right? The core don't care. Fake. Right? That 6%. Let's pat ourselves on the back. But everything else, notwithstanding, if they do raise, I feel like it's going to be a bloodbath. I think it'll be a big red day. But the question is, if they raise 0.25 and say we're going to pause next time just to monitor the bank stability, what will they consider that a good thing or a bad thing? Because again, then you're playing with fire. Because if they pause and inflation goes up, woo, that's real bad. Have fun, pal. Have fun. All right, let's go ahead and do the drawing for today. So. It looks like we have 5 entrants in, 6 tickets in. Who are we missing here? Easy E is not in today. Who else are we missing? Neuro's in. Debbie Will. There's Ernest. Who are we missing? We had more yesterday. I forget who. Debbie Marina. I don't know. We're missing somebody. That's okay. I'm going to give him about 30 seconds, close it down, and then go get Man Flu in the other room. He's the biggest baby, but I keep saying 15, by the way. He's 17 months old, almost 18 months old. It's crazy. But 100%, his nickname is going to be Man Flu forever. So he may jump off the couch, but God forbid he gets a bump. He's a mama's boy. All right, let's close it down. Winner of today's drawing is, again, starting fresh today, Ty. Ty gets it. And Ty, you're doing the right thing. You used your free ticket today. You didn't try to buy the pot. Way to go, Ty. So let's see. Let's figure out where Ty is on the leaderboard. Position 69. We're going to mess that one up for you, Ty. Let's see. 50, 69. Here we go. Absolutely, we'll mess this one up. There we go. 25. Oops. Not 265. That would have been quite a jump. Boom. And you popped all the way up to 60. And you're pretty close. One more day and you'll be back up in this 150 range. So, all right. So that's it for today. So again, tomorrow morning we do have University of Michigan consumer sentiment. I don't think this actually gives us a valid thing, a valid number. Um, Again, with everything going on, we have, even here it's retracing 5, but 24, 20, 29, 32, and again 72 starting to accelerate a little bit. We're not getting everything that we again. I think there's some headlines coming. Um, what I'd kind of like to see, and again, yesterday I was right with the retracement. I'd kind of like to see these all gain a little bit of ground. I'd like to see them all come up a little bit, but I do feel that tomorrow could be a big red day. If we have anything negative or any type of Fed statement that says we need to follow the path, I think these all crash pretty deep. Um, but it will help if we get a green day today. If we can get everything just to go up a little bit more, if there's no other headlines and we rally back up a little bit, I think tomorrow gives us a big red, is what I'm going to call right now. So, all right, with that, I'm out of here. I'll catch you guys tomorrow morning, 9:30 Eastern Standard Time. Thank you for joining me today, and I'll catch you guys tomorrow. Take care.